In today's video, I'll be analyzing 4 stocks that were recommended by our followers in our IG story. Cha-ching! What's up everyone? Welcome back to another video with the Millennial Finance. 2 days ago, we asked all of our followers on Instagram about what one stock have they been interested in but want to analyze before they decide if they want to invest in it. A huge shout out to all our followers who gave us recommendations. I couldn't cover all of them because there were just too many, and of course we didn't really have time, so it was only 2 days ago. Anyway, there are some super interesting names and I'm very excited to get started. All 4 of these stocks are available on eToro, so it means we can invest in them. If you want to try your hand investing in these 4 stocks, or in fact any other stock, you can do it with eToro, where I'll leave the link down in the description below and you can start right away. Before I start, I just need to say that I'm not a financial advisor and this is not financial advice. So, the first stock that I'll be going through is AMD. AMD is a semiconductor company who develops chips for computers and laptops like graphic card and computer processors. For all of you gamers out there like ourselves, I'm pretty sure you know this very well. In this market, there are 3 main players being Intel, Nvidia, and of course, AMD, where Intel has always been the market leader until very recently. Historically, Intel has always been the biggest of all 3 companies and they dominate, especially on the CPU part. However, Nvidia recently took the title from them for being the biggest semiconductor company in the US. In AMD's case, they actually produce both graphic card and computer processors, going head-on against Intel in both segments. On the other hand, Nvidia really focuses on only graphics cards and don't really produce computer processors or CPUs. As a consumer, I really like AMD's products. During the MCO, I really considered buying a custom-built PC so I can play games when I had nothing else to do, right? And I actually chose AMD's Radeon as my CPU, and I really considered AMD's graphics card as a choice. Even though I didn't end up buying the custom-built PC, I did a lot of research with many of my friends, and in fact, many of them really went with the AMD graphics cards. This is one of the reasons that I own AMD. I mean, if I like their products, it only makes sense if I invest in a stock, right? Well, more recently, I actually switched this from AMD, which I've sold out of, to Nvidia, which I currently own. One of the reasons that I did this is because of a huge market opportunity that both companies are facing, but Nvidia is currently leading in my opinion. While many people will know that the graphics cards and CPUs produced by AMD and Nvidia are really widely used for computers and laptops, many people don't know that these chips are also used for AI, data centers, Bitcoin mining, and even self-driving cars. I'm gonna be completely honest and admit that I don't 100% understand the technicalities of it. Still, these are markets with monstrous potential growth, so it's something that AMD and Nvidia can both really build on. In this aspect, I actually did some research and found out that Nvidia is the current leader, which is one of the reasons that I decided to swap out my AMD stocks for Nvidia. However, I still think that the market is so huge that if you decide to go for any one of them, you'll still be a winner. I just didn't want to own 2 stocks from the same industry, which is why I decided to sell my AMD stocks. Financially, AMD has had a massive turnaround recently. The company had been performing really poorly ever since 2012, where they've been raking in losses year after year. This changed when their current CEO, Lisa Su, came in and made them focus on their core competencies, returning them to a profit-making company ever since 2018. Ever since, the stock price has shot up massively, where I believe it was trading below $10 at one point, and it's now currently at around the $80 mark, meaning a 10 times increase in just a span of a few years. However, this means that AMD stock is trading at a pretty high PE ratio. So, valuation-wise, it might be a bit expensive to buy AMD stock right now. However, it's the same with Nvidia, and it's because investors are really excited about the future prospects of these companies for the reasons that I mentioned. And to be honest, I'm still buying Nvidia, so that's that. I just think that the potential ahead for both of these companies are just so large, and it doesn't really matter that their price-earnings ratio are currently quite high. Still, don't take my word for it, and of course, do your own research. Next up, we have Unity Software, a new IPO who actually just went public last Friday. On its first day of trading, the stock, under the ticker symbol U, actually shot up 44% because investors were so hyped up about getting in. I was one of those guys who was super hyped up, but unfortunately, I didn't manage to get in. Anyway, Unity provides a software engine for game developers to build games. It provides a framework for these developers where they can start building their games off of sort of templates and they don't have to start completely from scratch. This makes it super convenient and easy, which makes the company very attractive, and they have 1.5 million active users currently. They don't actually make their own games, but instead they provide the platform so that developers can go on and do their thing. Their main competitor is Epic Games, who is famous for the game Fortnite. The difference between the two, however, is that Epic Games don't only provide the platform, but they also make their own games. One of the most popular games made on the Unity platform was Pokemon Go. Remember the time when they said they wanted to bring everyone outside and explore nature, just so that you can look at your phone the whole time? Good times. In terms of the addressable market, Unity software was actually built for the purpose of providing this platform just for video games, which by itself is already a massive market. What's interesting is that the founders of this company realized that the 3D tools that they made for game development can also be used for other purposes. In their IPO filing, they actually mentioned that so many companies in the Fortune 500 from different industries like the automotive, construction, and even architectural industries actually found uses for their platform. Looking at their website, you actually see the tagline, Unity for All, where they're actually trying to address the different verticals that they're trying to enter other than the video game sector. This creates an extremely exciting future for the company because their future growth now isn't only tied down to the video game industry. Their management had the foresight to see beyond that. And one of the best indicators of a stock that's going to shoot up in price is, of course, a good management team. So that's another plus for them. In terms of their financials, this company, like many of their software peers, isn't actually making a profit. I don't really see this as a big issue for now because a lot of the other software companies that I invest in also are the same. However, we want to see their losses decline year over year instead of going up. One thing that we don't want to see in a company is them growing their revenue by so much, but also having their losses pile up by an equal amount. No thanks. Still, this company has a super attractive gross margin of around 79%, which will really help them in the future. Revenue-wise, they grew 39% year over year in 2019, which isn't amazing for software standards, but is good enough. What we want to see with this company is them executing well on increasing their addressable market and not just in the video game sector. It'll be very interesting to see how they get companies in different verticals start adapting the use of their 3D tools. Since this is a major thing that I'm looking for in this company, I expect revenue growth rates to increase and I want them to go above the 40% mark year over year. While doing this, I'm also going to set a pretty high standard for them where I want to see their losses start going down while their revenue goes up. I really like the potential of this company, and of course I have a soft spot for the gaming industry. However, I'll be holding back for now and I'll let the stock price stabilize after its very recent IPO. I'm gonna add this to my watch list. Okay, since we've had two relatively high growth stocks, our third one recommended by a follower is a more stable one, being McDonald's. This company needs no introduction. I mean, if you don't know McDonald's, then I guess good for you. They're one of the largest fast food retailers all over the world, with valuable real estate across all over their stores. Financially, this company is a beast. They bring in around $20 billion of revenue every single year, with $6 billion of profits. The company is worth a massive $150 billion, and they also pay a nice juicy dividend of 2.6% every single year, making it a favorite among growth dividend investors. When you look at growth rates though, it's where the problems start to arise. You see, they're finding it difficult to grow their revenue recently, and over the last 4 years, it's actually dropped from $25 billion in 2015 to $21 billion today. And this is the main problem that I have buying McDonald's stock. I just don't see any area of the business right now that can significantly increase their revenues. I mean, of course, I do eat my fair share of McDonald's, especially during my uni days. I used to eat it a lot. People are starting to shift towards the healthy eating mentality, and this could really harm McDonald's. I'm pretty sure they've identified this trend and started to shift a bit by selling salad and stuff, but I just don't know whether this will be enough. Are the millennials and Gen Zs of today going to choose a McDonald's salad over La Juicera Superfoods? I'm just not sure. Another fundamental problem that I have in McDonald's is the process of which they source their meat. I'm not trying to say this from a judgmental point of view because, to be honest, even I eat meat every single day and I don't see myself stopping in the near future. I'm just trying to look at the longer term time frame and trying to see where McDonald's fits in this. To conclude this segment, I think McDonald's is a great company with tremendous profits and a lot of valuable assets all over the world. The nice dividend of 2.6% is also another plus point, bringing in a lot of dividend investors. Whether this will be a coffee can stock for the next 20 to 30 years, well, not for me. Maybe if this was 40 years ago and I was a boomer, I would definitely invest in McDonald's, but not today. The last company that I'll be going through is actually one that I've never heard of until this follower brought it up to me, which is Exelixis. I'm not even sure if I pronounced that right, so Exelixis is a genome-based drug discovery company who apparently tries to treat patients with cancer and let them live longer and recover stronger. They currently have 4 marketed products, so they're not one of those biotech companies with just stuff in the pipeline but actually have nothing to sell. I'm gonna give a disclaimer right now that I'm not actually very strong in this biotech and pharmaceutical sector. It's just not really my strength, which is one of the reasons that I don't really invest in the companies even though I know the potential is huge. This company is addressing a very big market since it's going for cancer and it's genome based. Its crown jewel is a product called Cabometyx, which is approved for treatment for both certain types of liver and kidney cancer. Despite there being so many biotech companies out there, only very few of them are actually profitable consistently. Exelixis is one of them. Unlike all the others though, Exelixis is actually one of the few ones who are both profitable yet still growing at double-digit growth rates. In 2015, their full year revenue was only $37 million, whereas last year they brought in $968 million, increasing this by almost 30 times. Despite projected slowdowns in revenues because of the lockdowns, analysts are expecting 2021 and 2022 revenues to be well above the $1 billion mark, meaning the growth isn't going to slow down. As I mentioned earlier, this company is actually profitable and brought in $300 million of profits in 2019. This is unlike many of its other peers who are fast-growing biotech companies yet are making a lot of losses and don't have even products in their pipeline. The combination of a highly promising drug, high revenue growth, and good net margins make Exelixis actually one of the best biotech stocks that I've stumbled upon. But then again, I don't really go out looking for the best biotech stocks out there. I used to own this one company called Vertex Pharmaceuticals, who is also in the biotech industry. Even though I knew the growth rate was incredible at over 50% every single year, I eventually sold it out because I wasn't really comfortable not knowing what their product is. Likewise for Exelixis, even though everything looks super promising, I probably won't be putting my money in here due to the fact that I'm not very sure unless I'm putting in a lot of time to do my research. And that's something that I believe all of us should try to practice. If the product or the business model is too difficult for us to explain to someone else, then it's probably best that we just, stay out. I've stuck to some of the safer names in this industry, such as companies like Nvidia, who is trying to make genome testing available to the entire public. If any of you are involved in this industry or have done a lot of research on it, just let us know down in the comments down below what you think about Exelixis. It's a bit too complex for us, and it's okay for us to admit that. If you want to invest in any of these stocks or you want to try your hand in investing in the stock market, you can use our link down in the description below to sign up for eToro, and the sign up process is incredibly quick. If you really want to try to invest but don't know how to use the eToro platform, you can watch this video over here, or if you want to see how I'm going through my journey of building a 5-figure stock portfolio, you can watch this video here. If you found this video helpful, give us a thumbs up, share it to your friends, and subscribe to our channel if you haven't already. My name is Emir. Thank you so much for watching till the end, and see you in the next one. Peace out.